So you've been hearing me talking about price action, but you don't really understand what price action is all about, right? So what is price action? Price action in trading is simply the movement of price on chart without relying heavily on indicators. It is how traders read the market by observing raw price behavior, how price moves, how price reacts, and how price form patterns over the time without using tools or indicators like Fibonacci retracement, Bollinger, whatever, RSI, whatever, all those indicators and tools without using them. You look at the chart, right? Then you use the behavior of the market to understand the intent of price. So that is what price action is all about. So let's go to chart and I'm going to show you core ideas of price action so that you understand, right? Or let me say price action is what reveal the context of the market, right? The context of the market. So when you understand the core ideas of price action, you'll be able to identify the context of the market. And this is where most traders get it wrong because they rely heavily on indicators, okay, or some rely heavily on market structure, okay, because this is what they actually teach them as technical analysis. No, that's not enough. There are about four core ideas of price action. So market structure is just one out of these four. So if you rely on market structure to analyze the market, you're going to make a lot of mistakes and you're going to take a lot of invalid entries and you're going to struggle a lot for you to get an edge in the market. So if any trader develop a strategy, that trader uses price action, not indicators. He uses price action by looking at the chart, right? Seeing what chart is doing or what the market is doing, understanding the reaction and knowing the why behind the reaction. That's how every single trader build a strategy. All right. So number one core idea of price action is candlestick behavior. Candlestick behavior. That's number one. Candlestick behavior. Right. Behavior. That's number one. Then number two is support and resistance. Support and resistance. Then number three is market structure. Number four is patterns and setup, right? So this is the core idea behind price action. And when you understand these core ideas, you combine them together, you can be able to understand the context of the market. And without understanding the context of the market, you will not be able to get a valid setup, right? You'll not be able to get a proven strategy and you'll not be able to build an edge. All right. So now let's start with the number one. The candlestick tells you who is in control. Is it buyers or sellers? The candlestick reveals their weakness, right? Then the candlestick also tells you the possible reversals or continuations levels. That's what the candlestick tells you. Remember, when you are trading, you are dealing with human behavior entirely. You are dealing with human behavior and you have to understand the psychology behind that behavior. So since you cannot penetrate individual brains, right, you use technical analysis. The technical analysis now reviews the behavior of each and every individual person that participate or contribute to the global economy. Remember in our introductory video, I explained something how the entire forex algorithm is designed to actually review the behavior in the global economy. Every single activities that we do on daily basis, determine our economy value or our economic strength. Whether we buy a car, we buy a house, or we buy food stuff, whatever activities that we do, as long as that activities involves transactions, it determines the strength of our economy, right? But this is on macro level. This is on macro level. So for you to understand the macro economy, you have to start with the micro economy. The chart is the beginning of your understanding of microeconomy. So when you get to the fundamental analysis, that is when you start looking at the macro economy, because fundamental analysis basically uses psychology, not technicals. Psychology, the entire human behavior. The technical use some patterns, right, to reveal that behavior, right? So technicals is on micro level, while fundamental is on macro level. So, for example, when you have a long bullish candle, it tells you that you have a strong buying pressure in the market. And when you have a small candles, it tells you that there's an indecision. Yes, there's an indecision among the traders. They are not ready to decide the direction of the market yet. It's either because of fear or because of greed. Okay, I'm going to break down more subsequently. Then, when you get to the support and resistance, these are key levels where price reacts. At support level, price tends to stop falling, and at resistance level, price tends to stop rising. So, price can't just decide not to rise or not to fall. There must be a behavior behind it. There must be an activity behind it. If, for example, you have like 1 million traders, okay, what if 9,000 out of 1 million decided to buy? Where do you expect the market to go? The market will go up, right? Because there is a decision already, and this decision comes from the buyers, right? And what if that 9,000 sell? The market will definitely go down because there is a decision, and that decision comes from the sellers. So structure helps you to understand the overall direction of the market, who are moving with force collectively. Is it the buyers or is it the sellers? Behavior is usually random. If that behavior keep happening for a longer time, there will be a repetitive pattern in that behavior. So as a trader, you are looking for that repetitive pattern. Now, let's say, for example, you want to start a business and you need a partner and you have like 100 friends. Are you going to call all of them to be your partner? No. You choose by how you understand the person that you want to partner with. There's that particular friend that you know, this guy understand the nature of my business. Does that mean you know everything about him? No. But that repetitive pattern in him that keeps showing every time is what make you understand that the guy is perfect for the business that you want to start, and you now choose him as a partner. All right. So anytime you come to the market, you're looking for a pattern, a repetitive pattern, because a market is a pool of behavior, a pool of behavior. So you are looking for a repetitive pattern, a particular behavior that repeats consistently. consistently, then you leverage that behavior to make decision. Okay, so for instance, let's say we have a resistance level here and price move towards the resistance level, and after getting to resistance level, instead of price to you know break that level and continue to go up, it forms a long wick, right, rejecting that level, right? So let's say, for example, this is the wick of the last candle that formed at our resistance level. So a price action trader might think sellers are defending this level and there might be a possible sell to the downside, right? So this is how you use price action to you know make a decision as a trader. So the major candlestick formation are bullish engulfing, right? Rejection candles. So let me show you bullish engulfing and rejection candles. These are the two major candle formation that we use to understand the context of the market, right? And the other one is candlestick closure, right? Candlestick closure. So let's look at bullish engulfing. Look at this, our order block here. First, we have a small candlestick, right? Then we have this long candlestick. So if you look at this long candlestick from this angle, you can see that this long candlestick covers the small candlestick here. That is what we call bullish engulfing. So this candlestick behavior tells us that price is ready to buy. So as a trader, we use that context to make a trading decision when price is already at our POI, point of interest. We are coming to that. Let me show you another example. Okay, look at another example here. We have this small candle here and we have this long one. So if you look at this long bullish candle from this side, you can see that this long bullish candle covers this small one here. So this is what we call bullish engulfing. When we have something like this, we now understand that price is ready to rally. So price is ready to go up. So this is a bullish engulfing, and the bullish engulfing has a bearish candle, then a bullish candle, a black candle, then green candle. Then in the normal default settings, it should be a red candle and a green candle. Okay, so let's see bearish engulfing. Okay, so here is a practical example of bearish engulfing. I'm looking for a clean one here. Okay, fine. This is example of bearish engulfing. Look at it here. We have this small green candle and this long black candle. So this is what we call bearish engulfing. For the default settings, you're gonna have green bullish candle and red bearish candle, right? The second candle must engulf the first one. It must cover the first one and it must be bigger or longer than the first one, right? That's how we know engulfing candles, right? So this is the example of bearish engulfing, right? So let me show you another bearish engulfing. Okay, look at another one here where I mark this expansion, right? So you have this small green candle and this black long one. This black covers this small one. If you look at it from this angle, it covers this small one. So this is our bearish engulfing, right? And what happened after the bearish engulfing? Price push down or sell down. So let's look for another bullish engulfing. For example, another bullish engulfing. All right. So look at another one here. You can see this very tiny candlestick, this one here, and we have this long one. So from this angle, this long candlestick covers this small one, right? So, and what happened after that? Price rally up. So this is our bullish engulfing, right? So then the second one is rejection candle, right? So usually when you do your analysis on higher time frame, you wait for rejection candle confirmation on lower time frame. Yeah. So this is for our time frame, right? So let me show you a practical example of rejection candle. When you go down to 15-minute time frame, it shows you the rejection candle of 4-hour time frame, right? Let me show you example here. Let me show you example. Let me show you example. So now we are dealing with price action, right? And I'm telling you the most important thing that you need to know. Okay, look at here. This is what we call rejection candles. Is either the rejection candles are short or they have small body and long wick. All right. Is either they are short like this or they have small body and long wick. So this is the wick of the candle. This long one is the wick and the wick, and this box is the body, right? The body, the wick, the wick. Is either we have long wick or short candles that indicate rejection candles, or you can have it on the same time frame that you are getting your setup, or sometimes due to market volatility you will not see rejection candles on the same time frame that you are doing your analysis until you go to lower time frame. Okay, let me show you rejection candle with short candles, not weak. Short candles. Let me show you example. Not weak. Short candle. Okay, look at this one here. We have this short candle. We have these two short candles. That's rejection candles. But when you get to lower time frame, you'll see it more better. Let me go to lower time frame and show you. Okay, let me show you rejection candle on lower time frame. Okay, look at this zone here. You can see before price sell to the downside here, it forms small candles with long wick. That's rejection candles, right? Okay, let's check another one. Aha, see another one here. Before price push to the downside here, it forms multiple candles with long wick. That is rejection candles, right? You will use that one for confirmation. See another one here. Price was rejecting this zone here before selling down. Is another thing we use for confirmation. So see rejection candles here. Price reject this zone before selling down. All right. Look at another rejection candle. Long wick. You can see long wick. After this long wick formation, price push up. So basically, we use these two candle formation, rejection candle and bullish or bearish engulfing as confirmation. Then under support and resistance, let's say this is our resistance level, resistance level. This is our resistance level. right? And this is our support level. Okay, support level. Okay, now when we have price moving from down, right, to up, that is price move from support level to resistance level. When you have price move from up to down, that means price move from resistance level to support level, right? So this is what resistance and support in price action means. So at resistance level, we have order block, we have rejection candle, and we have bearish engulfing. At support level, we have the same rejection candle, we have bullish engulfing, right? And we have order block. So we use that to confirm the intent of the market. And once those price action validate the intent of the market, then we expect another buy, right? Or another sell from resistance level, right? Depending on where you meet the price. Is it at support level or at resistance level? Let me show you example on chart. Okay, so look at these levels here. This level here is our resistance level after price leave the support level here, and you can see we have a multiple rejection candle at resistance level here, also multiple rejection candle at support level here. Look at it. This is our support level, right? This is our support level, right? Okay, let me start from here. This is our support level, right? So before price leave this support level, we have rejection candle. Look at it. This long wick, long candle with long wick, that's rejection candle. Then we have our what? Bullish engulfing. Let me show you. Clean bullish engulfing. Look at it. This candle engulf this other one here. Now what happened after that? Price price push to the upside. So from support level to resistance level. When price get to the resistance level, we have another rejection candle, which is this candlestick here with long wick. That's a sign of rejection, right? And a breakout. So price now break out, then come back down below the resistance level, then went back again to retest the resistance level, and then finally what happened? Price now come down again, right? So when price get here, we have another support level, then price reject that zone again, right? Then push to the upside again to what? To resistance level. Then price get to the resistance level, push down to 50% of the range. The range is the middle or the center of support and resistance. So that's the 50%, push down to the 50%. Then after pushing down to that 50%, went back again to retest the resistance level. Then after the retest, price from our bearish engulfing and our order block, then push down again, right? So some traders, when price get to this level, they will not understand what price is doing until they use a Fibonacci retracement. But when you master price action, you don't need a Fibonacci retracement. You exactly know that, yeah, price is at 50% of our support and resistance level, right? So, all right. So what happened when price break a support level? When price break a support level, that support becomes a resistance. And when price break a resistance level, that resistance level becomes a support. and let me tell you why. This is our support level, and we have this resistance level. This previous high is resistance level, and this low here is our support level. When price move from this support level to the resistance level, now look at what happened here. It break the resistance level, right? When price break resistance level, that resistance level becomes a support, right? So now after breaking it, continue to go up, right? Continue to go up. So the resistance becomes a support. It's just like you standing on the first floor of a building, right? That floor that you stand on is your support. When you jump like a Superman and you break that floor above you and then you land on it, so that floor that is above you becomes your support, and the next floor above it, right, becomes your new resistance level. So this is a very simple analogy of support and resistance so that you can understand it much more better. So in the next section, I'm going to explain market structure, which is more detailed and more technical. Then when we get to strategy building, then we now explain chart patterns and setups, right? So see you in the next video.